The broadcast is now starting. All attendees are in listen-only mode.
Hello, and thanks for joining us for today's webinar on Medicare Bad Debt. I am Nick McLaughlin. I've been a member of the sales and marketing team here at AmeriCollect for almost 6 years, and I get to be your administrator for today's webinar. If you have a question for us at some point throughout the webinar, please type it in the question box or email us. Sean or myself will get back to you right after the webinar to address those questions. Now to introduce the main event, Sean Gretz. Sean is our Vice President of Sales here at the ridiculously nice early out and bad debt collection agency, AmeriCollect. Has been with us since 2003. We've been lucky to have him. Sean, what do you have for us today?
Thank you, Nick. So Medicare Bad Debt is a revenue opportunity for many hospitals. I want to be clear on this. This is our second attempt at doing this presentation because we had so many people sign up for the first one. We had to make a second one because of the seat limitation. This is strictly for hospitals. This is really a hospital issue or a health system issue. If you're not a hospital, you really don't need to know it unless you want to learn something and just listen to my voice, and I might put you to sleep. No, I'm kidding. I'm not going to put you to sleep, but you can listen to my voice. So really think about this. This is for hospitals. As Nick said, I've been with the company for quite some time. Who I am, I'm the Vice President of Sales for AmeriCollect and Maryville. But I always got to say on these webinars, people seeking legal advice should always consult their attorney because I'm not one. So make sure you consult an attorney if you need help with that. Who we are. AmeriCollect has been in business since 1964. We provide a better patient experience by being ridiculously nice to your patients. It's about treating them the way you would like them to be treated. We provide collections and early out services or work in your name to help collect those self-pay accounts. That's who we are. That's enough of the advertisement. Let's dive in. Baby boomers are coming. Yes, you heard me right. They're coming. They're coming for Medicare, and they're going to be coming in that big, huge ambulance that is going to be coming into your entrance soon. So what does that mean when those baby boomers come? So let's take a look at what that numbers look like. And this comes from Medicare Trustees Foundation. It kind of gives you the data backwards. In the next 15 years, so if you look at that 2015 to about 2030, you see the growth of those Medicare beneficiaries. They're coming. They're going to be coming in droves. They're going to be coming in 30 million more to your facility. That's a lot of people coming to you. And that's where the revenue opportunity lies with Medicare Bad Debt. There's a portion of these individuals that are not going to have the means to pay their Medicare copays and insurance, co-insurance, and deductibles. And when they don't have the means to pay, well, the smart people at CMS, they put something into the Medicare laws that allows you to receive reimbursement. And that reimbursement is 65 cents on the dollar. So if you're not doing Medicare Bad Debt right now, you're losing out on 65 cents on the dollar of those that are uncollectible. So let me help you get 65 cents on the dollar. This webinar is really going to be talking about that. How can you take those Medicare patients that don't pay their bills, and how can you get 65 cents on the dollar? So as I said, when Congress put together the Medicare package, they put a sentence in that package that said, costs of services that are covered by Medicare will not be borne by individuals not covered by Medicare. Basically what that means is, if a patient is on Medicare, that the person that does not have Medicare, anybody with commercial self-pay, should not have to pay for someone that has Medicare. So uncollected revenue such as deductibles, co-insurance amounts can be added to what is called the Medicare share of allowable costs. And it goes vice versa. They also said it the other way as well, so that those that don't have Medicare should not be borne the cost of the other way around. So it's vice versa. But the good news for this basically means you get 65 cents on a dollar backwards if you have a Medicare patient that doesn't pay. But there's some rules to go along with this. Of course, anything to go along with CMS, you're going to get some regulations to say, well, how do you get reimbursed for this? So in order to qualify for reimbursement from the hospital, you must comply with three basic things. So A, B, and C here. Number one, you have to have some sort of collection effort. You got to make an attempt, is what CMS is saying. Make an attempt to collect on those co-insurance deductibles. Number B, you have to have some certain record keeping, so you got to keep track of those collection attempts. And C, there are certain reporting requirements. CMS is just not going to, or the IRS is not just going to cut you a check backwards for this. You have to have some sort of reporting requirements, and that's what we're going to talk about today. What is those collection efforts? What is those record-keeping requirements? What is the reporting requirements? And, oh, by the way, what happens if you get audited? And this is one of the key things about this presentation is we're going to talk about what happens if you get audited. Medicare bad debt is one of those that you will most likely be audited for at some point in your life. The fiscal intermediary is going to come in and take a look at your books and say, all right, did you do this the correct way? So I'm going to go through what those three things are today. We're going to talk about, what happens if you get audited, how to pass an audit. So let's dive in. Let's talk about the criteria for Medicare bad debt. Generally, a Medicare bad debt must meet all the following criteria to be allowable. A, the debt must be related to covered services and derived from a deductible and co-insurance amounts. Simple enough. It's got to be covered services and deductible and co-insurance. So Medicare patient, if a Medicare patient takes an elective procedure, you can't claim that on Medicare bad debt. It has to be covered services. So B, the provider must be able to establish that you made a reasonable collection efforts in most cases, and I'll talk about what I mean by in most cases. So similar to the 501R, reasonable collection efforts have to happen to the Medicare patient. C, the debt was actually uncollectible when claimed as worthless. So there has to be a phase where you say this account is uncollectible. And then D, the final one, you have to make a sound business judgment to establish that basically it's uncollectible at any time in the future. So D basically says you have to have some sort of reasoning, and what this comes back to, and I'm going to talk about this more later on, your audit defense number one, you have to have some sort of sound business judgment, and normally that is your billing and collection policy. Let's look at these, the two types of what Medicare bad debts there are. The first one is the simplest one. It's an indigent patient. When you have a patient that is considered indigent by the terms of Medicare bad debt, you do not have to do reasonable collection efforts. This is the easiest one to claim, and we'll talk about later on what percentage of the accounts that fall through in that purpose. Number two, you have the traditional uncollectible accounts. And in this one, yes, you have to do the reasonable collection efforts. My little patient down below, it looks like more of the indigent kind. So let's talk about that first. Let's talk about what does indigent mean. So indigent Medicare bad debts have three real categories. The first category is if a patient has Medicare as their primary and Medicaid as their secondary, they're considered duly eligible and they're considered indigent. So if a patient has that, Medicare as a primary and Medicaid as secondary, you can claim that as indigent bad debt. Now, there's some requirements I'm going to talk about a little bit more later on about this, but you can. And 59%, and this study comes from the American Hospitals Association, says that of Medicare bad debt claims, 59% of them fall into this bucket. The simplest ones to claim for Medicare bad debt and get 65 cents back on the dollar is that you look at those accounts that have Medicare as primary and Medicaid as secondary. You turn in a report log, and we're going to talk about what those logs are and how to put together those logs. That's the simplest ones to claim. Medicare primary, Medicaid secondary. The second one of indigent ones is financial assistance application method, meaning if your patient applies for financial assistance and is approved for financial assistance, that's the key. They have to be approved with an application. If that is the case, you can consider them indigent. The third methodology of being indigent is if the patient's deceased with no assets and bankrupt, and we're going to talk about a little bit more later on. You have to make sure when you use the indigent model that you're verifying all eligibility has been checked. So if a patient is deceased, you got to check to see if there was any other eligibility at that point of service, and you have to maintain documentation on this. You may get audited on this, but most likely this is the one that you're going to be the least amount of auditing that you're going to have on these. So maintain the documentation that the person was duly eligible, maintain the documentation, and we'll discuss that later on. Really what this allows you to do is to claim these simple ones easily without doing the reasonable collection efforts. If you're not doing Medicare bad debt right now, this is the ones that you have to start with. This is easy money coming back to you. So let's talk about the first one that we had on on the last screen, the duly eligible patient for Medicaid. If that's the case, if the patient has dual eligibility, where Medicare is primary and Medicaid is secondary, you can claim as soon as you receive the Medicaid remittance backwards. This is the one where you have to make sure when that Medicaid remittance comes backwards to you, and this is the third bullet point down here, that it's paid and not denied. So when you get this back to you, you've got to make sure it says paid and not denied. If it's denied, you cannot claim it until it is set as paid. So make sure, this is the easy one, all Medicare accounts, primary, Medicaid, secondary, that are paid automatically get put on this log. Let's talk about the B, financial assistance application method. So if a patient qualifies for financial assistance at your hospital, and you follow your hospital's written financial assistance policy, that Medicare patient can be claimed on your Medicare bad debt logs. A very simple one, easy to do. If that deductible and coinsurance is wiped out for financial assistance and they applied for financial assistance, meaning you have to have an application, you can qualify them. The hospital has to have a reason to thoroughly support their means to approve the financial assistance applications. Here's the interesting thing, where 501R says you don't have to ask for assets. In the Medicare bad debt law, it does talk about assets. Did you request assets? So in one law, it says you don't have to. In this law, you should ask for the assets to go along with it, liabilities, income, and expenses. This is the way the Medicare bad debt law was written, that you ask for all three of those things. But if a patient is approved for your financial assistance, you can put it on your Medicare bad debt log. Another simple one to do for an indigent patient. Now let's talk about bankruptcies and deceased, the third one, C, in the previous slide. Well, if a patient qualifies for bankruptcy or goes through the bankruptcy hearings for Chapter 7 or Chapter 13, the documents have to show that it was discharged, meaning that the patient actually made it all the way through bankruptcy. Chapter 13, you will need to file proof of claims. So one of the things that we did here at AmeriCollect is the first thing that we looked at when we saw the Medicare bad debt with Chapter 13s is that we're going backwards and looking at our Chapter 13s and making sure that we're filing that proof of claims for all Medicare accounts. For our clients, it allows them to classify all their Medicare accounts that filed for bankruptcy as Medicare bad debt. And so this is something key. So if a patient does have Medicare and it is filing Chapter 13, make sure you file that proof of claim in order to add it to your Medicare bad debt logs. You have to file that proof of claim. And the same thing with deceased as well. So if a patient is deceased, and if there's no estate, this is the easy one. Patient has no estate, you can claim that as your Medicare bad debt logs. If the patient has an estate, you will have to file a probate. So even if they're deceased and there's not much money there and you don't think you're going to get anything back, I would strongly suggest you file a probate claim against the account. That way you can claim it on your Medicare bad debt logs. So those are the three indigent ones. Very simple. Simple to go through. Dual eligibility, someone that has been approved for financial systems, and bankruptcy and deceased people. Now let's talk about the next variety, those uncollectible or traditional. This is the case where the patient is not considered indigent and there's more auditing that will be done on these accounts. The patient has the means to pay that doesn't pay is really what they're saying, and you have to do the reasonable collection efforts. So when you look at the uncollectible or traditional ones, you have to make sure that you're following your billing and collection policy and doing your reasonable collection efforts. So what does reasonable collection efforts mean? The language of the law says that you must issue a bill, and bill here, I'll say bill and statement are interchangeable in this. You must issue a statement shortly after discharge or death, is that you have to issue a statement. They ask for those reasonable collection efforts, and this is part of 501R as well, that you have 3 collection statements go out the door. A telephone call, this is really going back to reasonable collection efforts for 501R as well, so make a telephone call with that. And D is the key here. You have to list your Medicare accounts with your collection agency in order to claim them as uncollectible or traditional. So for a collection agency, to list with your collection agency, you have to refer all uncollected charges of like amount to your collection agency. And the way the language of the law was written, meaning that you can't just separate your Medicare bad debt accounts and not send them to collection agencies. You have to send them to your collection agencies. So if you have a balance threshold, let's say you have a minimum amount, and that's where B comes in, the like amount. So if you have a minimum amount so that the guarantor has to have a $10 or whatever that number is, balance threshold in order to send it to your collection agency, that's fine. Anything under $10 can be claimed on your Medicare bad debt logs, but you have to use your like amounts. If it's going to any other accounts in the same bucket would be going to collection agencies, your Medicare bad debt ones also have to be going to collection agencies. In this case, one of the things that the fiscal intermediaries in your audit are going to need to see is a copy of those statements that have went out the door, or the dates of those statements when they went out the door. So when was that first post-discharge statement? When did that go out the door? Most facilities are storing those dates of the statements on the Medicare bad debt accounts internally in their system. So you'll want to store that. You'll want to store the follow-up letters. Did you send them a final notice? And with 501R, most likely you probably are sending them a final notice. When did that final notice go out the door? That date should be documented someplace. And if you made some telephone calls, what dates of those telephone calls were made? The auditors will ask sometimes, as you can see on the bottom, but they will also ask for your collection agency attempts. So one of the key things with Medicare bad debt to pass an audit is you have to document these reasonable collection efforts. Did you send statements? Did you send a final notice? And when did you make phone calls? If it's documented in your notes, great. That's easy for you to pull up the patient accounts and send it over to the auditors and say, here's the documentation of all this. But make sure you are documenting these someplace in your system in order to claim these as Medicare bad debt. You have to make a presumption of non-collectability. And this is really where it comes back to you following your billing and collection policy that goes along with this. And what the CMS said or IRS said in this is that it has to be 120 days from the date of the first bill or statement that the debt may be deemed uncollectible for the purposes of Medicare. So let's talk about that. 120 days from the date of that first bill. You have to do some sort of reasonable collection efforts for at least 120 days before you can qualify them or place them on their Medicare bad debt logs. That 120-day clock really starts upon receipt of payment. So if a patient makes a payment at day 119, that restarts the clock. So there's a key scenario on that is saying, let's say a patient makes a payment on day 119, you're going to restart the clock at 120 days. But, and I've heard this many times from facilities saying, no, I got to keep all accounts in-house for 120 days. That's not what the IRS meant. What the IRS or what the CMS meant on this is that you have to keep them in-house for 120 days from when the date of the first statement goes out the door, plus early out plus bad debt. So it doesn't matter. You can send the accounts before 120 days as long as you're following your billing and collection policy and as long as you're following 501R, but you can send them the bad debt earlier than 120 days. Let's talk about provider-based billing in this case. Medicare bad debt does pertain to costs of services that a provider might bill on behalf of the provider-based physician. Does not, I'm sorry, I said that wrong, does not pertain to the cost. So if you do provider-based billing or any Part B professional component, Medicare bad debt does not, you cannot claim those on your logs. And if you're doing provider-based billing or if you have a centralized business office and you have payments that are coming in the door, you have to apply them proportionately to Part A and Part B to qualify the account for Medicare bad debt. You can't take all your payments and put it on the professional side because you can hope that you receive something backwards for Medicare bad debt. That's not the case. CMS says that you have to apply them proportionally based upon when they come in the door. So if you have a, let's say, a $70 balance and a $30 balance for a $30 professional, $70 facility hospital balance, you're going to have to apply a $10 payment, $7 to one and $3 to another. $3 to professional and $7 to the facility or hospital charge. That's how the CMS wants you to apply the payments that come in the door. Let's talk about the accounting period. When does Medicare bad debt have to be claimed on your audit logs? Well, what the CMS said is they have to be claimed in the period which the debts were determined to be uncollectible. I strongly suggest for a majority of these that are going to come back and you're going to put them as traditional or uncollectible, that your collection agencies cancel and return reports. Collection agency cancel return reports are going to make this easier for you if you have those logs coming back to you when they do it. So let's say your fiscal year is June 30th to July 1st to June 30th. You will have to claim all your Medicare bad debts that were canceled from your collection agency from June 30th to July 1st to June 30th in the previous year. You can't go forward with the account. So let's say an account was canceled back to you on June 30th and you would take it to the next fiscal year. That can't be the case. You got to go backwards with your fiscal logs, with these logs. They have to be in the same year. So you can't go back 5 years right now and go look at all the accounts that were uncollectible and say, oh, I'm going to put those all in this year. That's not the case. It's only in that year where you can claim them. You know, one of the things that we do is we make it easy for you. We create a separate Medicare client code in order for when we do cancel the accounts back to you, you have all the cancellations all together in one. And one of the other things that we do, we created a Medicare Excel log for our clients as well. So any client that would like to have a Medicare Excel bad debt log, it automatically comes back to you. We fill in the majority of the items. I'm not going to click on this link, but it's in your handouts as well, and the handouts are also available to you on the GoToMeeting panel on our website. You can get the handouts as well. Click on that link. That is the link that shows you the Excel log that has to be completed. So this is what CMS is asking for to claim those Medicare bad debts. So that's the log that's available to you and how it's out there available to any one of our clients as well. So let's talk about the final thing, the sound business decision. This is interesting because in the sound business decision back in 2016, a hospital group, and I believe they are the Washington, D.C. area, they won a court case because what they wrote into their billing and collection policy was based upon what they called a sound business decision. They said their sound business decision for Medicare accounts was that before they used a first placement agency and a second placement agency. And what they said is, well, let's take those accounts that have Medicare bad debt, and we listed with a primary collection agency. That collection agency collected on it for 365 days, but right before we listed for second placement, so send it to a new collection agency to collect on it after the 365 days, we're going to qualify all the Medicare accounts as Medicare bad debt. And they wrote this into their billing and collection policy. Now they went into court and fought this in court, and they won the court case in order to have a sound business decision in order to claim them before second placement. Not saying you should do this, understand this, because this is one of those items that where you're going to have to really think about the ramifications if you were ever to be put into a court case about this. Or if a fiscal intermediary denies your claim for the Medicare bad debt accounts, do you want to take it to court? But this group of hospitals in Washington, D.C. area decided it was worth the battle. So they made a sound business decision. They put it in their billing and collection policy that said that before it goes to second placements, we're going to qualify them as Medicare bad debt, and they won the court case. Now, I don't know if this is the final, we're going to hear about this court case or not, but think about this. How else can you make sound business decisions, and how would you like to use sound business decision, especially in your billing and collection policy? How would you like to put that in there in order for you to claim Medicare bad debts earlier than the statute of limitations or when they're returned from your collection agency? All right, let's talk about the audit defenses. So as I said before, that billing and collection policy, that is your number one audit defense, right? So if your billing and collection policy is not updated to talk about those reasonable collection efforts, and most are because of 501R, I strongly suggest that you start working language into there about sound business decisions and about Medicare bad debts and when you will be claiming those accounts as Medicare bad debt. This is your first line of defense against those fiscal intermediaries coming in and auditing you for Medicare bad debt. As I said before, and the link is above again, your Excel logs, you need to keep these logs that come back from your collection agency of all accounts that are canceled that had Medicare as their primary payer. So you need everything, and the Excel document shows the beneficiary's name, the beneficiary's number, discharge date, the indigent status. So if you are claiming indigent ones, so let's say bankruptcy and deceased ones come back from your collection agency, that should be in there as well. The date of the first bill from a beneficiary or supplements, and not always the case, but from sometimes the case, the collection agency may have that date of the first bill. Medicare remit date, or when the amount was paid backwards, the amount of the deductible and co-insurance. Now this is an interesting one because a lot of our hospital facilities don't provide as a collection agency backwards that deductible amounts and co-insurance amounts. You will have to work through the balance that was returned from your collection agency to determine which ones were the deductibles and which portion was the co-insurance. You need that amount broken out in there. And the write-off amount and the write-off date, when it was actually closed and returned for your collection agencies. And part of this as well, when you're indigent ones, you're going to need that Medicaid remit date and the Medicaid number if applicable. So this is when you keep this externally. This is what has to be turned in to the IRS, part of your 990 reporting at the end of the year. So this is your external log. And this is usually done within 60 days of the close of the fiscal year. You have to put together this log and have it all prepared. As a collection agency, you want your collection agency to provide this data backwards to you. Well, let's talk about audit defense number 2. And really what I'm putting on the screen now is a list of a lot of things that a lot of my clients, when they look at doing these audit defenses, to make sure that they have everything they need in case they are audited, to make their lives easier instead of waiting for that audit to gather all this data. So one of the things that a lot of my clients do, they'll build this internal log, the audit defense log, where they take all this data plus the previous 2 pages of the external data, and they create an entire spreadsheet that has all this data of their Medicare bad debt accounts, and they wait with it. It's their tiger and crouching, waiting for that fiscal intermediary to come, and you have this data, and you spring this data upon them, and you know what the fiscal intermediary is going to say is, well, this facility knows how to do their homework, and you may be audited 1 year and 2 years, but after that, what I've heard from my clients is that after a certain point, you don't get audited anymore when you have this internal log so that they know you know what you're doing in your Medicare bad debt. And then it makes it easier for you that not every year that you have to go through the fiscal intermediary's audit on Medicare bad debt. So this is your internal log in case you are audited, your audit defense. It allows you to have this stored ready for it. My strong suggestion to you is that if you have someone in your office who's really good with data, pulling data, and combining data together, that's the person you make in charge of your Medicare bad debts. And really, when you look at that dollar amount, as we go back to one of the first slides of the presentation, we talk about 30 million more Americans are going to be coming in. The baby boomers are going to be coming into Medicare. How many more of those millions of Americans don't have the means to pay for their deductibles and co-insurances? And if you can get 65 cents in the dollar backwards for those deductibles and co-insurances, with the little bit of work that goes along with it, it's well worth it to claim these as Medicare bad debts. So I think I'm just at my coming at my time. I am available to have questions. My email's on here and my phone number as well. Give me a call if you have questions on Medicare bad debt, or if you have any questions, you can email me as well. This webinar has been one of those that we're passionate about helping our clients in order to claim those Medicare bad debts. It's 65 cents on the dollar. It's well worth it for our clients to claim those. Your collection agency should be helping you getting this information backwards. But if you do have questions, just feel free to email me or shoot or send me give me a call as well, and I can give you a hand on, and some suggestions on how to claim Medicare Bad Debt. Nick, is there any questions that I can answer for anybody that was on the webinar?
We do not have any in right now, so yeah, feel free to email if you'd like, and we will get back to you.
Sounds great. Well, thank you for joining this webinar. I think our next webinar is coming up on the reference-based billing or reference-based bowling. You can check on our website at americollect.com. Knowledge, I believe it's the Knowledge Center. You can go on there to register for that one. It's going to talk about how to work with reference-based billing companies and how to make sure that you receive payment and not negotiating with those reference-based billing companies. So have a great day, everyone.